Hey, Crypto Growth fam, how's it going? This is your host Shazib signing in. We're back with another HBAR video. In this video, we're going to be exploring the DEX of Hedera, which is Saucerswap. I've already made a video on Saucerswap. You guys can check this out. In this video, we're going to be exploring Saucerswap version 2.0. So it's going to be an interesting video. Make sure to stay tuned and watch till the end. And folks, for those of you who are new to the channel, we primarily discuss utility coins. You guys can see which coins we usually discuss. If you're interested in them and other potential gems, then do subscribe for regular videos. Now, guys, first and foremost, let us look at the prices of both Saucerswap and Hedera HBAR at the time of the recording. Let us check out HBAR first, guys. Basically, HBAR is priced at around $0.05873 at the time of the recording, guys, with a market cap of approximately $2 billion. You guys can see in the last month with the entire market, guys, Hedera has also performed well. It is up 25.56% for the month. In fact, it had gone all the way to 0.063, and since that time, it is trying and consolidating and finding a price to stabilize because BTC also is dipping. Let me check it out. Yeah, 1.67% down for the day. So yeah, it is the entire market was rallying, and now the market is dipping, guys. I saw many coins that are dipping at the time of the recording, guys. So yeah, let us look at the sauce, guys. So one sauce is priced at around $0.02128. And guys, check this out with a meager market cap of $11.62 million, and volume. A turn on. Okay, let me close this. So yeah, volume is around 600,000, guys. So this is good. And you guys can see the max supply 1 billion sauce. If we look at the fully diluted market cap, it is $21.28 million, but with the current circulating supply, market cap is 11.62 million, guys. So yeah, sauce has also performed well. It has gone from 0.01646 all the way to 0.02243 in the last month. If you look at the all-time charts, guys, so basically uh, Swas is basically trying to find its a place to break out, I think, because these are the resistance levels, guys. Check this out. These are all resistance at the moment. So this went all the way up to 0.025. It tried to break this, but it came back down, and now it yet again is trying to break these resistance. And in my opinion, it might do so because of this news that we're going to be exploring. Let me share this with you guys. Let us go to the official X handle of Saucerswap Labs. Saucerswap is the pioneering DEX on Hedera. So yeah, this news, guys. November 12th, launch announcement. So Saucerswap version 2 launches on Friday, November 17th. 9:30 p.m. UTC. Usually, when this sort of news comes, people basically go on and buy the coin, and it rallies to a certain extent. So this might be a good opportunity for those looking for a short-term pump as well, because I've seen many coins pump over the years of being in crypto. So yeah, you guys know this already. Launch announcement. Saucerswap version 2 launches on Friday, November 17th. Okay. Features. So what are the features of Saucerswap version 2? Concentrated liquidity, MetaMask support, LARI, liquidity aligned reward initiative, tokenomics version 2. We're going to be checking that out in a bit detail with the article that they've posted. New web app and more. Let's bring Hedera DeFi to the next level, guys. Let us look at this brief video. A nice tune to it, to be very honest. All groovy. Anyways, What is Tokenomics V2? Here's the information on Tokenomics V2 set to launch on Friday with the upgraded protocol. We're going to be checking that out. Let us look at the comments first. An interview soon. Would love to host you guys. Cool. It would be cool if you host them. We're going to be learning a bit more about V2 and Saucerswap. Okay. When step to unlock? Wow, this is going to be epic. 6 days. Okay, let us now check this Medium article out, guys. So this is the Medium article, and it is from their official handle. This was published on July 16th, basically, guys. So Saucerswap version 2 tokenomics proposal update. This proposal has since passed and will be enacted when version 2 launches. The updated tokenomics can be viewed here. Additionally, an in-depth explanation of the liquidity aligned reward initiative, the incentive model for V2, can be viewed here. Let us open them in a new tab. Let this in a new tab. Okay. This article will introduce the upcoming Saucerswap version 2 protocol and discuss the motivation for and proposed structure for an updated Sauce tokenomics. So this article will basically introduce the Saucerswap version 2, which is now launching on November 17th. Saucerswap V2 tokenomics proposal, concentrated liquidity, reduced inflation, reallocation, and more, guys. So background. So Saucerswap is launching a concentrated liquidity market maker protocol based on Uniswap version 3. This CLMM, referred to as Saucerswap V2, gives individual liquidity providers granular control over what price ranges their capital is allocated to, guys. Individual positions are aggregated together into a single pool, forming one combined curve for users to trade against. In turn, this can generate more trading fees for LPs within the active price range. Furthermore, Saucerswap V2 introduces a multi-tiered fee structure. This allows LPs to be appropriately compensated for taking on varying degrees of risks. So basically, it depends on what risk you can afford, guys. So it would have a multi-tiered fee structure accordingly, guys. Basically, Saucerswap will therefore inherit the flexibility and capital efficiency of Uniswap, the leading DEX by market share, while also leveraging the innate benefits of the Hedera network and an intuitive UI UX. Key advantages. Now, these are the advantages that the version 2 is going to be having. LPs have the capacity to provide liquidity with up to 4,000x capital efficiency in comparison to Saucerswap version 1. So 4,000x is a hell lot more compared to the V1, guys, thus receiving elevated returns on their capital, guys. Capital efficiency allows for trades to be executed with greatly reduced price impact in comparison to both centralized exchanges and stablecoin-focused AMMs, automated market makers, basically. So the trades that are going to be executed won't impact the price much. There's not going to be much volatility in comparison to the V1. LPs have the opportunity to increase their exposure to desired assets and mitigate their downside risk. So the liquidity providers would also have the opportunity to increase their exposure to desired assets and mitigate their downside risk. So the risk to dump and go down is going to be minimized by the V2. As well, LPs have the ability to trade one asset for another by depositing liquidity into a price range entirely above or below the current market price, emulating a fee-earning limit order that executes along a smooth curve. So what are the additional benefits? Transactions are fairly ordered, no MEV, front running, and confirmed with finality in seconds, guys. So this would be efficient and seamless, guys. The transactions, due to Hedera's absence of blocks, high throughput, and low predictable fees. As you guys know, Hedera is extremely good with its throughput, and it doesn't have the blocks, so the fees are going to be obviously predictable and low. So it basically Saucerswap V2 is taking advantage of Hedera's potential, basically, guys. V2 is not subject to the cost prohibitive nature of protocols on most other layer ones. Therefore, it will prove greater accessibility and market competitiveness during periods of high DEX usage across the industry. Example, volatility, bull market. So it is going to be a much better alternative. It's going to be providing in terms of competition when there is a lot of volatility in the bull market, guys. Let us explore a hypothetical scenario to understand the potential for diminished reliance upon liquidity incentives as a result of increased Saucerswap V2 fees. Let us assume $11.8 million in TVL total value locked. Some liquidity will remain in V1 pools and a volume. So basically, guys, let me remind you guys that they have pools and liquidity in V1 as well, guys. So yeah, and a volume liquidity ratio of 29.83%, median of Uniswap V3 comparables. When setting the protocol fee to 16, the $3.5 million daily projected volume translates into $1.8 million in supply side fees, that is fees to LPs, and 370K in protocol revenue per annum. For comparison, let us compare it with version 1. Version 1 has 19 million in TVL and generates $483K in supply side fees and 97K in protocol revenue per annum. So guys, Saucerswap version 2 returns a 15.64% average real yield APR versus the 2.47 average APR currently offered by Saucerswap version 1. Guys, so this is growing as well. 15.64% average versus 2.47 average. So yeah, this is the next level. Even when accounting for the 12.04% average farm APR of the current protocol, Saucerswap V2 has the potential to offer greater overall incentives to liquidity providers. Moreover, LPs and V2 pools will be primarily compensated in tokens underlying the respective pool, example HBAR and USDC for an HBAR USDC pool. These tokens can be claimed directly, guys. Sauce emissions. Saucerswap proposes a 60% cut to the inflation rate of newly minted sauce. Coinciding with the launch of Saucerswap V2, this cut would be effectuated incrementally over a period of 6 weeks to facilitate a seamless migration of liquidity to V2 pools, guys. Let me take you guys down over here to the tokenomics part, guys. HBAR emissions. Currently, the farm contract receives a transfer of approximately 3.12498 HBAR per minute from the HBAR payment splitter. These tokens are then emitted to yield farmers in V1 pools. As part of the ongoing distribution process, to align with source rewards, this would be reduced to 0.6484 HBAR per minute, which is 20.75% of the current rate, guys. So single-sided staking, as a reminder, single-sided staking yield is derived from three distinct sources: swap fees across all liquidity pools. So where the single-sided staking yield, where is it derived from? Basically, it is coming from swap fees across all liquidity pools, sauce emissions, and HBAR native staking rewards, guys. So yeah, of this total yield, the reward contribution can be broken down as follows: 17.92% from swap fees, 8.13% from sauce emissions, and 73.95% from HBAR native staking rewards, guys, where the sauce emissions are tied to liquidity incentives from the farm contract, guys. Summary of the proposal. So, summary of proposal: reduce the inflation rate of newly minted sauce by 60%, reallocate newly minted sauce emissions as follows: 90.91% to 47.16% to V1 liquidity incentives, 9.09% to 9.09% to dev cut, and 0% to 43.75% to the DAO treasury, guys. Sauce DAO allocation may be used in part for Sauce version 2 liquidity incentives. Reallocate HBAR emissions as follows: 100% to 20.75% to V1 liquidity incentives and 0% to 79.25% to the DAO treasury. HBAR DAO allocation may be used in part for Saucerswap version 2 liquidity incentives, guys. So, in a nutshell, with the opportunity of increased capital efficiency and a shift to real yield incentives, Saucerswap proposes an updated sauce tokenomics model to coincide with the launch of Saucerswap V2, built upon the strengths of Uniswap version 3 and taking full advantage of the Hedera network. Saucerswap introduces a next-generation CLMM enabling increased trading volume and concomitant fees for LPs. Guys, Hedera's DeFi ecosystem was people were bashing the ecosystem a bit because they said that they have to basically up their game. So I think that the version 2 is an answer to that question, or that bashing that Hedera was going through. So they're trying their best to up their DeFi game as well, because Hedera ecosystem cannot thrive without a good DeFi. This is for sure. Any good ecosystem has to thrive, which aims to thrive has to do it on all scales, and DeFi is a core scale, guys. Core sector. The core maintainers of the Saucerswap protocol are excited to experience the launch of Saucerswap version 2 along with the community and look forward to bright future of DeFi on Hedera, guys. This is yet another article, guys. Saucerswap V2 Liquidity Aligned Reward Initiative, LARI. The launch of version 2 is fast approaching, pending the release of a final audit report by Omnitia and some remaining work on the front end. In the meantime, the Saucerswap core maintainers are excited to introduce the Liquidity Aligned Reward Initiative, a novel feature of Saucerswap V2 that will be available at launch, guys. So what is this feature? V2, a concentrated liquidity market maker, CLMM, affords liquidity providers the potential for higher yields. We already went through this through increased capital efficiency. However, token incentives are still crucial for bootstrapping liquidity, ensuring a broad distribution of sauce and strengthening protocol governance. So this is where LARI comes, where LARI provides users with token incentives for their active and efficient liquidity contributions, guys. This system represents an advancement from traditional yield farming, addressing certain limitations of the version 1's MasterChef contract, notably the obligatory staking of LP tokens, which transfers LP custody, is not optimal. Moreover, it is inefficient to reward LPs without accounting for their performance. So LPs should be rewarded as per their performance. This is the criteria. Every reward token, such as Sauce or HBAR, should not only incentivize liquidity, but also ensure its optimal use. It should be highly efficient. The use should be highly efficient, guys, with rewards reflecting this objective. The better your performance, the better the rewards you're going to be getting, guys. So how it works: initialization before the push begins. Each liquidity pool is assigned a weight of token emissions. Monitoring during the epoch, the V2 peer contracts are continuously listened for liquidity mint and burn events. These events are captured and stored. Reward calculation: as the active tick changes, the LP's liquidity position may fall in and out of range. Saucerswap's algorithm for calculating rewards takes into account the position's time spent within range of the active tick and only accumulates rewards while the position's liquidity is being used, guys. So we already went through the tokenomics, guys, version 2 proposal. So yeah, guys, what do you think about Saucerswap version 2? Do you think it is the game changer for Hedera's DeFi ecosystem? What do you think, guys? Do you think it's going to be changing Hedera's DeFi aims and ambitions and objectives? Is it going to be an advancement from version 1? What do you guys think? And one more thing, guys, that you guys can also uh, make sure to watch the price action at the moment, because I think that whenever a news comes, the price reacts, the token reacts. So the launch is bound to happen on November 17th, 9:30 p.m. UTC. So do check out the price as well. This is for the short-term traders, guys. So guys, these were the features. We checked them out in detail. LARI, Tokenomics V2, MetaMask support, concentrated liquidity, new web app, and more. So, guys, if you like this video, make sure to like, share, and subscribe. And if you're interested in HBAR videos and all the other utility coin videos, then make sure to subscribe as well. And do not forget to hit that bell notification for reminders. And like I always say at the end of the video, until next time, stay blessed and stay tuned. Thank you very much, everyone.